The Atram Alpha Opportunity Fund Incorporated has one mission: to look for the winners of tomorrow. The fund actively finds the fastest growing Philippine companies with high quality management and sound business strategies. This growth has often translated to higher stock prices. The fund has a proven track record of selecting companies outside the Philippine Stock Exchange Index that were eventually included in major indices, while most funds in the market stay within the Philippines' top 30 companies. This has led the fund to consistently outperform the market in the long term. Furthermore, the fund invests in long-term drivers of growth that could provide significant gains for investors, such as technological advancement, tourism, infrastructure, and sustainability. Invest in the potential of the best growth stories the Philippines has to offer. Invest in the Atram Alpha Opportunity Fund Incorporated. For more information, visit www.atram.com.ph.
Hello and good morning, everyone. Thank you very much for joining this week's episode of Atram Webinar Series. I am JP Chong, Business Development Manager, and I will be your host for today. Today's session is dedicated to Atram's best performing mutual funds of 2021. Stay tuned to learn more about these funds and how Atram experts navigated the volatile market to achieve these returns. If you have any questions, you may send them as early as now by clicking on the Q&A found below your screen. Before we begin, I'd like everyone to know that this session will be recorded and also posted on all our social media platforms. Also, please don't forget to visit our website. That's www.atram.com.ph. for a more detailed information about all the funds that we offer. If you have any friends who you think would like this webinar but are unable to attend, feel free to share the YouTube replay of this session and visit our YouTube channel that's at Atram Studio. Please scan the QR code found on your screens. Maybe we can give our audience a couple of seconds to get their phones out and scan the QR code for them to visit all our official social media pages. Also, would like to invite you all to join Atram's official Viber community group. That's #AtramPH Community to stay updated on the latest announcements, advisories, and reminders. Again, we invite our audience to scan the QR code, or you may visit the link found on your screen. By joining, you may get a chance to win Atram merchandise. We'd like this webinar to be as interactive as possible, so please do not hesitate to send in your questions. You may do so by clicking on the Q&A tab all throughout the webinar. Each question you send is a raffle entry for a chance to win limited Atram merchandise. Winners will be announced at the end of the webinar, so please make sure to stay until the very end. We'll also be wrapping with a quick feedback survey after the webinar. We do hope you can share your thoughts with us about our session for today and how we can further improve our webinar series. With those out of the way, let me briefly introduce our speakers for this morning. Our first speaker is Mr. Carlos Navarro. Carlos, as we call him, is currently a portfolio manager in the Atram Equities team. He was previously the portfolio manager for equities in the trust banking group of the second largest local bank in the country. Carlos has 8 years of experience in the fund management industry. He holds 2 master's degrees, and the first is a master's degree in management with the University of Asia and the Pacific, or UANP. And the second is a master's degree in computational finance with De La Salle University. Also, join us today is Atram's very own Mr. Miguel Liboro. Miguel is Atram's head of fixed income. He completed the BAP Treasury Certification Program and was awarded the #1 rank in the most astute investor in Asian currency bonds by the Asset Magazine. That's consecutively from 2015 to 2021. And the most astute investor in Asian G3 bonds from 2018 to 2019. Now, that we have introduced the members of Atram's competent and experienced team, we'll begin with today's discussion by taking a look at the performance of the Atram funds last year and their ranking against the benchmark and other peers. First on our list is the Atram Opportunity Fund, which generated a whopping 26.36%. And the fund has outperformed the benchmark by 13.02%. The fund still holds the number one spot in peso equity mutual fund in the Philippines. At this point, I would like to call on Carlos Navarro to explain more about the fund and its strategies. Hi, Carlos. I know you're on the line. So, hi, how are you? It has been a while since our last webinar.
Yeah, hi JP. Thanks for the introduction. Nice to talk to you again.
It was nice to talk to you again. Thank you very much for joining us today.
Sure.
Of course, with that, Carlos, let me start off by asking, how are we able to generate such returns, even outperforming the benchmark for our fund?
Yeah, sure. It's really about, as the mission of the Alpha Opportunity Fund states, we are looking for the winners of tomorrow, the big cap index names of tomorrow. So we were able to identify at the early stage three specific stocks which would eventually be included in the PSEI. So as early as 2020, we were able to identify AC Energy and Wilcon, and eventually Converge once after the IPO. So we were able to identify those stocks which eventually would be included in 2020 in 2021 for the PSEI, and they were also included in the foreign indices. So besides that, just to add, we were also able to identify GMA7, which was also one of the top performers of the fund. GMA7, of course, was a beneficiary of the non-renewal of the franchise of ABS-CBN. And the next is we were also able to identify All-HC or Ayala Land Logistics, again, one of the top contributors of the outperformance of the fund as a primary beneficiary of the new economy.
All right. Thank you very much for that, Carlos. And of course, we would like to emphasize we are looking for that investors of tomorrow, the winners of tomorrow. Correct. And you also mentioned AC Energy, Wilcon, Converge. So you gave us a little bit of an insight or a tidbit, if you will, on the certain stocks. So how about the investment process? Can you give us more color on this one?
Yeah, it's very research driven. Now, the reason why it's research driven is because we are looking for those stocks which are undercovered by analysts, because there's a huge mispricing there if it's undercovered by analysts. So therein lies a lot of opportunity really for those stocks that have huge mispricing. So we conduct our due diligence on these stocks. So besides looking for the earnings growth of the company, the management, the industry, we also take into consideration the risks involved, such as governance, execution, and ESG. And we bake all of that in to arrive at a fair value for that company so that we would be able to identify which stocks we want to be invested in and how overweight or underweight we are for those specific stocks.
All right. Of course, you mentioned it is research driven, and of course we do our due diligence, and we also take into account the risks involved. We know now what the little tidbits of how which equity funds that are equity stocks that has driven the returns and the investment process. Where is it positioned now? I'm pretty sure our audience are very excited to know about this.
Sure, we're invested in several main themes currently, which coincides with our outlook for 2022. The first one is the reopening of the economy. The second one is the new economic drivers. The third would be the elections, and the fourth would be ESG. So those are the four main themes that we are currently invested in. And the specific stocks that we are currently heavy in, we have RLC, CNPF, Converge, Wilcon, and also Pure Gold.
All right. Thank you very much for that, Carlos. Of course, just to echo in on what Carlos has mentioned. So in terms of the position, we are awaiting for that reopening of the economy, that we are optimistic, hopefully, that the current pandemic that we're currently experiencing. Of course, the most awaited elections, and of course, we have to mention the SDG initiative. So again, thank you very much, Carlos, for sharing small tidbits to our audience. You shared your views and strategies relating to the Atram Opportunity Fund. Of course, let us move on to the next best performing mutual fund on the list. But before that, Carlos, we will see you later again for the Q&A portion. So I would like to invite our audience to please key in your questions in the Q&A tab, and we will tackle them later during that segment. With that, let us move on to the Atram Corporate Bond Fund, which is the best performing, the next best performing mutual fund on our list. So just to give a quick, brief overview, Atram's flagship fixed income fund, managed by the #1 most astute investor in Asian currency bonds. Miguel has delivered a YTD return of 1.50% and is ranked #1 in peso fixed income for corporate bonds. The fund is designed to generate regular streams of income and capital appreciation by investing primarily in Philippine peso corporate fixed income securities by Philippine companies. At this point, I would like to call on the man himself, Miguel Liboro, to explain more about the fund and his strategies. Hi, Miguel. Thank you again for joining us today. How are you today? How are you so far in this Thursday morning?
Hey, JP. Thanks again for that overly flattering intro. Of course, a lot of the performance comes down to how the rest of the members of the team have been doing their jobs. And how have we been? I think we've adjusted quite well to how everything has been. Sorry if you hear planes flying overhead occasionally throughout the webinar, but that's a good sign based on what Carlos said, right? The reopening of the economy.
Yes. Of course, Miguel, we just have a couple of questions for you. I'm sure our viewers here right now joining our webinar are very interested to know. To start it off, Miguel, how are we able to generate such returns on the #1 peso fixed income fund for corporate bonds?
I guess first, best to put the returns into context as you see here. If you're comparing it, I guess, to the 26% that we just showed from the equity side, of course, they serve like a different purpose. Last year, in contrast to a bit of a recovery in the equity side, it was a very challenging market for fixed income. We were coming from all-time low yields in 2020 from the pandemic, and as we began the recovery in 2021, rates, of course, started moving higher. So the light or the dark gray line over there, you see, which fared very poorly at around -3%, was actually the broad benchmark for Philippine government securities. And government securities are conceptually the safest, right? The most risk-free. But because interest rates are moving up, they got hit the hardest. And as you can see, they're generated negative returns for the year of close to or just under 3%. In contrast, our own strategies, the light gray line there was a money market fund. So you see it very stable there. But of course, returning a more modest return, being invested in mostly T-bills, time deposits, and with rates on the front end that low, of course, the return, while stable, was modest. On the dark blue line, before I get to our main event, on the dark blue line is actually another of our flagship strategies, the Total Return Peso Bond Fund. That fund actually returned 10% or 11% the previous year in 2020 as interest rates were going down. But when rates started going up, of course, it was a much more challenging environment, as you can see from how the benchmark did. And I guess, although we can't do it all the time, we believe the first rule of making money is don't lose money. So we're happy to say that at least all of our strategies were able to preserve capital and not lose for the year as rates went higher. Which brings us to the corporate bond fund. In an environment where the benchmark generated -3%, how were we able to generate a positive 1.5%? And it's really because of the construction of the strategy. It's meant to be an accrual strategy, as you mentioned earlier, provide that kind of stability that you need in your portfolio in good times and bad. And for the fixed income market, I think last year being classified under the bad, but it was still able to do what it was supposed to do and provide an anchor for the fixed income portion of your portfolio or your portfolio in general.
All right. Thank you. Thank you very much for that, Miguel. I liked it that you were able to touch that one of the fundamental principles of finance in terms of fixed income, where when interest rates rises, bond prices tell to go down. So again, we'd like to thank you for that, and of course, to echo in what you mentioned, the fixed income market took a hit or was a challenging time last year. So with that, how was our fund allocated last year, and where is it positioned now?
I guess we could move to the next slide. What you see before you, don't be intimidated by numbers or anything. It's really just the allocation or breakdown of how the fund is positioned. We like to be very transparent with what we show because as it is a corporate bond fund, it is exposed, much like on the equity side, to specific companies. And we want to be extremely transparent about which companies we're investing in. As you'll see there, many, if not all, the names are, well, not all of them are household names. Most of them are, but many of them at least will be familiar to us, I think. Sorry, I used the stock tickers. In the future, maybe I'll use the actual company name just for those not familiar with the stock tickers. But I guess what I want to highlight is, as of January this year, this fund, as you can see there, had a gross YPM of above 4%, and with an average tenor of around 3 years. And it held similar metrics also last year, which when you kind of think about it, at the beginning of last year, when rates were very low, it was very hard to find something yielding that high. And it's really because of, as I mentioned earlier, the construction of the fund. When issuances come out, as you assess the creditworthiness, you're also assessing whether or not the yield being offered compensates you properly for the risk. It's not just about getting the highest yield possible. It's getting the best yield possible for the amount of risk that you're taking. And although we were coming from very low yields in 2020, because the fund had actually been accumulating some of these positions from earlier on in 2018 and 2019, when yields were higher, it allowed the fund to maintain that higher yield to maturity, even as yields had gone down. And a good thing about that is, as I mentioned, now what I drew my attention to earlier was that the average tenor or duration of the fund is now close to that of a 3-year bond, meaning a reasonable part of the fund is actually maturing this year. And as yields have gone up, it makes sense to have that natural reinvestment capability now. We didn't have to take any losses as rates moved up, as you saw from last year's performance. And now we have that natural reinvestment as yields have started to go back towards the 4.5% to 5% level. So in 2020, the fund actually returned 3%, which is more consistent with how we envision it longer term. And in a year where the benchmark was quite negative, it still delivered 1.5%. And this year, well, I'll talk about outlook later, but I think we are on track to go back towards that closer to 3%.
All right. Thank you very much for that, Miguel. Of course, we'd just like to echo on what Miguel has mentioned, the best yield possible. And again, most of the names that you found on your screens right now are household names. You have your SM Prime Holdings, you have your San Miguel Corporation bonds, you have your AC and Ali or Ayala Land Incorporated bonds. So with that, we've seen already where we are positioned right now. We've seen the allocation. So what are the opportunities or opportunity sets the Atram Corporate Bond Fund invests in, like, moving forward?
I think generally speaking, much like Carlos described how the alpha opportunity moves, we're quite open to a wide set. I guess some context in the local market is that, as you can see there, I mean, as everybody knows, our local market is really dominated by just a few of the too big to fail conglomerates, and that you see that more in the bond market, the corporate bond market, than you do in the equity market, with maybe the top 5-6 corporations really issuing the bulk of the volume in the market in terms of bonds. And that's why you see there, we try to kind of mix it up and offer a larger amount of diversification, because at the end of the day, even if you don't necessarily think that a certain issuer will default, do you really want to have 100% of your investment in that one issuance or issuer, right? So it's not about whether or not they are going to default. It's the possibility that they could, especially in a post-COVID world. With that in mind, like I think that the local market was definitely, or the local companies were able to weather COVID reasonably well. And you can see that in the ability that they had to continually issue corporate bonds throughout the pandemic. And that's the opportunity. As we kind of climb out of the pandemic, these issuances will only continue to ramp up because now that the capex cycles are restarting, I imagine the banks, while also becoming more aggressive again about their loan books, it'll still take some time for them to get back to the level they were at before. And that means that these issuers or these companies will continue to tap the debt capital markets by issuing corporate bonds. And with yields going up, that's good for investors at the corporate bond fund.
All right. Thank you very much for that, Miguel. And I would just like to take one question that we got from our audience. You've mentioned the strategy. So how do you think is our strategy different from our peers?
Sorry, how our strategy different?
Yeah, how do you think our strategy is different from our peers? Or the other our strategy, the strategy of the Atram corporate bond fund different from the rest of the fixed income peso bond funds out there?
Sorry, yeah, like I couldn't catch the end. Well, as I mentioned, it kind of serves different parts. So let's just compare it, I guess, to the funds I mentioned earlier. A money market fund is there to offer you absolute liquidity, complete stability, but at the expense of you knowing that you will more or less have a moderate but positive return. The total return peso bond fund is, as the name implies, total return. It tries to offer you whatever opportunities the market is able to offer. So in a market like 2020 or even 2019, where at first, and you'll recall in 2020, for the first quarter of the year, the bond market got it just as bad as the equity market. Before we ended the year at 10 to 11%, the total return bond fund tries to find those opportunities within the volatility and trade around them to be able to generate that excess return. So as you saw from the performance last year, in a negative environment, that means hopefully at worst or at best, capping it and keeping it positive still. But the corporate bond fund is really there to provide, as you've seen, that stability to your portfolio, to show that even though the markets are unresponsive, are quite frankly negative, there is a part of your portfolio that you can reasonably expect to still perform, considerably better than a time deposit and be certainly more well diversified than having to buy single line corporate bonds where you already have to worry about liquidity, you have to worry about concentration risk. Because as you can see from this, we don't let the fact that the local issuance market is dominated by just a few players kind of force us to be very highly concentrated.
All right. Thank you for that, Miguel. You mentioned earlier that you will explain the outlook for the Philippine fixed income, and we have one question about it. So can you please share with us your outlook for the Philippine fixed income and the return expectations for the rest of the year?
So in layman's terms, not as positive as Carlos is on the equity market, but it won't be as negative for fixed income as last year, I think. Last year, we had a significant move higher in interest rates. We were coming, let's just use the 10-year as a barometer, I guess. We were coming off the 10-year low in 2020 at, I don't know, 4. At the time, it was, I think, below 4. It was around 3.5, I want to say. And we ended the year with the 10-year at more than 1% over that, at close to 5%. And that's really what caused that significant loss in the bond market. As you indicated earlier, JP, as rates go up, the prices of your existing bond holdings go down. So that's what was happening then. This year, we do expect rates to still adjust higher, but just marginally so from the beginning of the year, where we are today, to the end of the year. We think it'll be quite a volatile year first, driven by a lot of factors. not the least of which are inflation, which we are reasonably constructive on right now. We do think that inflation, as it comes out tomorrow, will be lower than 4% still. But there are still a lot of factors affecting how rates could go. Again, not the least of which is how quickly people anticipate global bond yields to move up. Anybody that's been reading the news, I think, is quite familiar with all the rhetoric coming from the US Federal Reserve. And the Philippines will not be unscathed by a heightened move up in global bond yields. With that said, I don't expect the BSP to adjust anywhere closely as aggressively as we expect the US Fed to, just because they have said in the past that just because the Fed moves means that they have to as well. And I believe that. And because we're in a very different place from an economic recovery standpoint from the US.
All right. Thank you very much again, Miguel, for sharing, of course, for sharing to our audience your views and strategies relating to the Atram Corporate Bond Fund. We will see you again in the Q&A session. I know there are lots of questions I see right now in the Q&A, and we will tackle them later on. All right.
Thank you.
Next up is the Soldivo Strategic Growth Fund, which has generated a return of 2.63%, also outperforming its benchmark by 2.87%. Indeed, a very impressive performance for our Soldivo Strategic Growth Fund. Let us call back again none other than the fund manager himself, Carlos Navarro, to share with us his strategies for this fund and, of course, as well to help our audience in their investment decisions. Welcome back again, Carlo.
Yeah, I'm back. Hi
Let me
again.
keep the ball rolling by asking, how are we able to generate such returns for this fund, even outperforming the benchmark?
Yeah, I think it's mainly because of stock selection. You know, there's another strategy called sectoral allocation, but we believe that because of the environment that we were in 2021, you know, with all the variants coming in, we expect, you know, further lockdowns because of the variants that we were coming in. We weren't still able to achieve herd immunity in 2021. So we really expected it to be a volatile environment. So the way to navigate those that kind of environment is really through stock selection. That's why we were able to concentrate our portfolio in a select number of stocks that would meet the criteria that we have set for our portfolio. So it's really stock selection over sectoral allocation. That's how we were able to generate the outperformance for this fund.
All right. Thank you for that, Carlos. And you mentioned stock selection and, of course, sector allocation on this one. So I'll just move on. A good transition to the next question we have here, sent by our audience. Could you take us to your asset allocation decision for last year? Maybe
Sure.
it contributed to the positive performance of the fund.
Sure. Now, since I mentioned already stock selection, I could be more specific and tell you the main contributors, the stocks that mainly contributed to the outperformance of the fund. Well, the top two are Converge and Wilcon. Those are the two. There are, of course, other stocks that contributed to the outperformance of the fund, you know, such as Manila Water and ICP, but I would like to focus on the top two contributors. So first, we had Converge. Again, it's very rare to find a company that would not only survive throughout the pandemic, but would actually thrive. And Converge was that perfect stock, that gem in the mine there, because it was able to thrive during the pandemic. You know, internet demand really skyrocketed in 2020, 2021. Of course, I think everybody knows that already. And Converge was at the forefront of that demand in the fixed broadband space. And they were actually grabbing market share left and right, and also they had the most market share in terms of net adds. So you can really see that Converge was really at the forefront in terms of the fixed broadband space. So that's why we like Converge. And also moving to the future, the fixed broadband space is only penetrated by around 20 to 25%. So there's actually a lot more room to grow for the company. And the next is Wilcon. For Wilcon, it was hit during 2020, but the thing that we like about Wilcon is its earnings resiliency. It was able to bounce back in the third quarter of 2020, as early as the third quarter of 2020, which was, of course, very impressive. So it's that earnings resiliency that we like with Wilcon. A perfect example of that is nine months 2021 earnings already amounted to 1.9 billion pesos. That's compared to 1.5 billion pesos in 9 months 2019. So they have already surpassed their pre-pandemic levels in 2021. So that's how resilient their earnings are, and that's how fast they were able to bounce back from the pandemic. So that's why it shows Wilcon and Converge. Those are the reasons why, and those two are the main contributors of the outperformance of the fund, the top two contributors.
All right. Thank you very much for that, Carlos. And thank you also for sharing Converge and Wilcon. Converge being resilient during the current pandemic, and Wilcon, of course, by bouncing back early last year. So, of course, with that, I know I asked Miguel earlier this question. And, of course, I would also ask this question to you. Can you share to us, of course, to the audience as well, your market views for the rest of 2022, and how does this affect your strategy?
Sure. For our target returns, sorry, you're asking about the target returns for 2022?
Our market views for the rest of 2022.
Oh, market views. Okay. We're right now, we believe that the reopening theme is much stronger now than it was in 2021. The fact that, for example, in the NCR, 78% have already been fully vaccinated in the NCR. And for the whole country, 54% have been fully vaccinated. So the recovery theme is now much stronger in 2022 than it was in 2021. So that's why we are now more positive towards sectoral allocation. It doesn't mean that, of course, that we're doing away with stock selection, but we are now more positive towards sectoral allocation. More specifically, we are bullish in the banking sector and the property sector. So just a quick comment on why we like both sectors. For the property sector, we believe that in the residential segment, operating capacities will improve. They would be able to construct more condominiums, more houses, and that is accompanied by a recovery also in the demand. And for the mall segment, I guess that's pretty obvious already for everyone, because if we go back to the latter part of November and in early December, we saw the malls being completely jam-packed. There are some malls that actually, in terms of footfall, they actually exceeded pre-pandemic levels. So they were completely jam-packed, So that's what we are seeing also as quarantine restrictions are eased further. And that's why we like the mall segment. And those are the two reasons why we like the property sector. Now, for the banking sector, of course, one is loan growth. We're expecting about 8 to 12% loan growth for the big four banks. That's BDO, BPI, Metro Bank, and Security Bank, around 8 to 12% loan growth for this year. That is accompanied by, companies, corporates expanding to their pre-pandemic operating levels. And so there would be more working capital loans. And at the latter part of the year, we expect the SMEs and the consumer loans to recover. So we think that that's what's going to drive loan growth. And lastly, what we think that will benefit the banks are interest rate hikes. As Miguel mentioned a while ago, that we are expecting an interest rate hike by the BSP, probably in the second half of 2022. And that will benefit Philippine banks, probably the only sector that will benefit in a rising interest rate environment, because that will improve their borrowing rates, and that will improve and expand further what you call their NIMs, or the net interest margins. So that's the reason why we like the banking sector along with the property sector. So that's our views for 2022.
All right. Thank you for very much for that, Carlos. Of course, it's really nice to know that we have that recovery theme, if you will. You mentioned that, of course, our economy is slowly reopening, and the whole Philippines is around 54% fully vaccinated.
Yes.
To ask this last question before we proceed to the Q&A, again, I asked this also to Miguel earlier today and earlier in the session, and I would also like to ask this question to you. What do you think sets our Soldivo Strategic Growth Fund apart from other funds out there?
Well, we mainly rely on two criteria. That's the earnings growth and the fair valuation of the company. So we really like the companies that have high earnings growth and have a good upside to their fair values. So that's about 60% of the investment decision that we make. It's along those two criteria. We have other criteria for that, but 60% of that would really be in high earnings growth companies and those which have huge upside to their fair value. So I think that's what sets the fund apart, because other funds might be focused, for example, in high dividend yielding stocks, or they are more dynamic, meaning the strategy would change from year in and year out. But for us, we're sticking to a specific theme, which is that we are focusing on high growth companies and those which have huge upsides to their fair values. So we're sticking to that theme regardless of the economic cycle. So I think that's what sets the fund apart. And besides that, I think it is actually a logical strategy, because in the first place, the thing that drives stock market returns are really earnings and fair values. So that's why we think that this is an effective strategy for the fund.
All right. Thank you very much again, Carlos. We will see you again in the Q&A session.
Sure. Thank you.
There you have it, everyone. Our top performing mutual funds for 2021. So before we proceed, again, I would like to remind everyone to please, if you have any questions, you may send in your questions through the Q&A tab found in your respective Zoom accounts, and we will tackle them later during the Q&A session. And of course, by doing so, earns you a chance to get a raffle entry, to get a chance to win limited Atram merchandise. So I do hope all of you, our audience here, were able to take notes regarding what Carlos and Miguel has or shared with us all. And for those questions, we see a lot of them right now. Again, we will tackle them in the Q&A session. Of course, we would like to proceed by sharing that Atram has a wide range of investment products, and our capabilities span across several asset classes, meant to service the different investment objectives of each individual. And with these, it is with great pride that we announce that Atram has recently achieved 9 industry awards for 2021. The Best Local Fund House, given by Asian Investor. The Fastest Growing Fund Management Company in the Philippines, given by the Global Banking and Finance Awards, and by the Global Economic Awards. The Most Innovative Mutual Fund Offerings, again by the Global Economic Awards. The Best Investment Solution Provider from World Business Outlook, and the Most Innovative Asset Management Company from Pan Finance Awards. We'd like to add that the Atram Group and Atram Wealth received the Editor's Triple Star from the Asset AAA Sustainable Investing Awards and the Asset AAA Private Capital Awards, respectively, integrating ESG, that's environmental, social, and corporate governance in all our investment process. Finally, we want to say that the Atram Total Return Peso Bond Fund has also been recognized by the CFA Society of the Philippines as the best managed fund of the year for Peso Medium Term FVPL valuation category. So for today's session, we hope to have somehow assisted you all to #TakeOnTomorrow by investing your hard-earned money with an award-winning fund house. At this point, we would now proceed to the Q&A session, and we'll take the live questions from our audience. And I will have to call back Carlos and Miguel to help us with your questions. And we see lots of questions really coming in. And we thank you, our audience, for being engaging and it shows that we all of us here in this webinar is very interested and we want to take that opportunity to learn more about our funds. So hi again, Carlos. I know we had a short summary of the best performing mutual funds of Atram, and this is now the time for us to take the questions from our audience. for the first question, as I can see here, this one is addressed to Carlos. So Carlos, what are the key risks considering the Philippine equity markets?
One would probably be still COVID. I mean, we're still not over the hump, obviously. So that's still a risk. Probably other variants coming in that would necessitate lockdowns. That is definitely a risk that we're still seeing for 2022, although to a much lesser degree than 2021. If ever new variants come in, probably it would be more like Omicron, that it's less lethal already, So that's one risk. And the other risk that we're seeing, of course, is the uncertainty in the elections. For the elections, it's really the lack of certainty in terms of the economic platforms or the economic team behind the presidential candidates, because obviously the thing that affects the market the most is really how business friendly the candidate is. So we don't have that much resources to go on in terms of their economic platforms or the economic team behind them. So that's a source of uncertainty. And the last risk that we're seeing is the Fed. As Miguel mentioned a while ago, that the Fed is expected to hike rates aggressively, and the BSP will not meet that sort of that aggression in terms of hiking interest rates, as Miguel mentioned a while ago. So we think that with the Fed hiking rates more aggressively than the Philippines, that could possibly put some pressure on our peso. So that would entail FX risk for the foreign fund managers that would invest in the Philippines. So that's basically what I think the three main risks are for the equities market.
All right, thank you very much for that, Carlos. Again, just to recap, the three are, of course, we still have to take into account the current or the ongoing pandemic and the upcoming elections that I think most of are excited come May of 2022. And of course, we have to take into also consideration the Fed on our, of course, Western counterparts. For the next question, I would like to address this to the both of you, and it's in Tagalog, and I hope that you both answer it in Tagalog as well. So,
Magalingan tayo, Carlos.
Ready na, magaling tayo.
So, paano po namin malalaman kung natututukan po ng Atram yung investment namin?
Sige, ita-taglish ko na lang. I can go first because Carlos had to take the first one naman. Well, trabaho namin yan, di ba? As professional fund managers, sumusunod kami ng proseso kung paano ina-analyze yung mga investment, kung paano minamanage yung mga risk, and kung paano na-identify yung mga opportunity. Diba? So, I'll switch back into English now. So, that's how you know that the investment is being taken care of. One is through yung transparency, diba? Like webinars like today, where we show you what the fund is invested in. We discuss the thought process on why we're invested in certain securities or taking certain positions. But also, because as professional fund managers, it's really a big responsibility for us to be able to do this for our clients, diba? And we take that like very, very seriously. And you see it also in the types of, I guess, activities we have, such as this, and hopefully in the types of returns we're able to generate for you. Kasi hindi lang naman parang Wolf of Wall Street doon, nagbabato ng darts. Okay, game, Carlos.
Yeah, I couldn't have said it better. Miguel said it perfectly. The reason why we're here is because we actively manage funds. So, trabaho talaga namin yun. So the fact that we are here, it's proof enough that we are actively managing our funds, because yun talaga yung trabaho namin, yung responsibilidad namin. So I would just like to reiterate that. But what Miguel said was perfectly correct. Yeah, I agree with him. It's really our jobs.
All right. Thank you very much. Of course, salamat, Carlos at saka Miguel. For my next question, this is addressed to the both of you. could you please share what are your insights on the impact of the US market crush in our Philippine market? It could be equities or fixed income, of course, in mutual funds as well. Of course, in the realm of mutual funds.
Okay, I guess I can take that one first because it'll be more, I guess the impact is a bit more significant for Carlos. So he'll think about the answer. Um, on the bond market, when well, I guess US market crush, you're referring to the recent volatility, no? Like as what we've been discussing, as the US Federal Reserve has been viewed to raise rates more aggressively than expected, the equity market in the US has been understandably very volatile now. So I'll let Carlos talk about what the impact on the local equity market has been. But on the bond market, it's like I said earlier, diba? Although we don't expect the BSP to raise as aggressively as the Fed, and just so everybody knows, we moved from a consensus speculation from as recently as noong December lang, that the US Fed was going to raise maybe 2 to 3 times, so 0.75% for 2022. And that was just a month ago in December, to where we are today, where a lot of the global analysts are saying maybe the Fed will raise rates by as much as 5 times or 7 times by the end of 2022. So kita nyo, it's like a huge difference, diba? Like almost double in terms of the range of expectations. So the impact has really been for rates to kind of start adjusting higher. And we started seeing that nung December pa lang, which is why no fourth quarter noong 2021, medyo paakyat na yung interest rates. And that's part of the reason why sa tingin rin namin, by the end of the year, interest rates will be higher than where they are today. Not significantly higher, not like from the end of 2020 to the end of 2021. But of course, there will be that pressure for local interest rates to go higher because global interest rates are also going higher.
Carlos?
Yeah, sure. For the equity markets, if you saw the correction, it's really driven by tech firms. Those firms are most sensitive to interest rate hikes. For the Philippines, we don't have that much tech firms here in the country. That's why that we saw that while the US corrected in January, we can see that for the Philippines, we actually held around the 7,200 support pretty well. And that's because we don't have we only have a dearth of tech firms here. If we even have any, we don't have any direct exposure actually to tech firms. So that's why there's a difference in terms of the correction in the US market and here in the Philippines, simply because the US market is very tech heavy, while for us, we're really not. So that's where the discrepancy in the performance is. That's why we're seeing the Philippine market being more resilient than our US counterparts because of that. And another reason for that is a lot of the negative things have been discounted already in the Philippine markets. We were one of the laggards last year, and we are at a different stage of recovery compared to the US. The US recovered much faster than us. For us, we're only starting lately in terms of the recovery. So because of that difference in the stages of recovery in the US and the Philippines, we can see that we are just starting to rebound. And the stock market is also just starting to rebound as well, because we are in that phase of that recovery. So it's because of, so just to recap, there are not much tech firms here in the country. And the difference in the stages of recovery, we are just starting. So we can see that the foreign investors and the local investors are concentrating on the fact that we are just starting on the recovery. And that's why we're seeing a more resilient market than our US counterparts.
All right. Thank you very much for that, Carlos, and of course, Miguel. And I will move on to the next few questions. We're receiving lots of questions right now. Again, thank you very much to our audience. So the next question would be, what trends are you forecasting for 2022 in terms of which companies will be performing well? So anyone from the two of you can answer this one.
Yeah, okay. I think I mentioned this a while ago when you asked our market views for 2022. So I just want to repeat what I said, and that's really the property and the banking sector. We think those two really will propel the stock market up. And just to repeat the reasons for the property sector, it's really the residential segment as operating capacities improve, and the mall segment, as we have seen, again, latter part of November, early December, malls were jam-packed, and that's what we expect to see as quarantine restrictions are eased further. So that's one sector, and that's one trend. And the other trend is really the banks, the interest rate hikes, as Miguel and I have mentioned a while ago. That will benefit the banks because, of course, any increase in the borrowing rates will expand their net interest margins. And also, as the economy improves, we also expect loan growth to improve. And that's why we're forecasting an 8 to 12% loan growth for the big four banks. So those are the two main trends and that we're seeing in the equity market for this year. And we think that those two sectors will drive the returns for 2022.
All right. Thank you very much for that, Carlos. Of course, for mentioning again the two strategies or the sectors that we are looking into for 2022. The next question, this one is for Miguel. Bond rates nowadays are not that attractive. When do you think bond rates will go up or improve?
I guess like it's always a relative assessment now when you're talking about yields. Like remember, we were talking about 2020 when using the 10-year government securities rate hit an all-time low of 2.55%. That's like the lowest it had ever traded in the history of the Philippines. So and today the 10-year is back at around the 4.7% level, right? So is 4.7% like attractive? Well, it's not as good as 5.5, right? But it's a lot better than where we were coming from at 2.5. So given the view that rates are going to move marginally higher over the next year, I think it's a pretty decent time to start coming back into a bond fund or a bond portion for your total portfolio strategy to kind of anchor you. Because again, from a risk reward standpoint, there really is, I think, no better proposition than Philippine equities right now. I mean, Carlos laid it out earlier himself. Our base view is 8,700 by the end of the year. Coming from where? 75, 76, where we are today. That's huge, right? But if you want to have like something, again, going back to how the Corp Bond Fund acted for many portfolios last year, if you want to have something that's kind of stable, then I think now is a pretty decent time to start coming in because you've got corporate bonds of around the 5-year area coming out again at around the 4.5 to 5% range. And as I mentioned, the fund has a bunch of maturities coming in. And from the start of the year where we had an average YTM of around 4.1%, 4%, that'll be closer to 5%, I think, by the end of the year. So I think we're kind of on track. And we're starting again to get to that point where bond yields are starting to see some relative attractiveness again.
Right.
Are they going to go back again to like 2018 levels? I don't know. Right now, I hope not, because that means inflation is going to 6%.
Agree on that. Of course, we hope not that would happen again way like a few years ago pre-pandemic. Again, Miguel, another follow-up question from our audience, and I think this is a very interesting question. How will the upcoming elections affect the performance of investments in general?
Okay. Like I think Carlos talked about this a bit earlier, and actually, I'm gonna parrot his answer a bit because I've heard him answer this quite a few times. We actually took a look at historically what the impact of elections were post-election, irrespective of who won, on both the equity and the bond market, right? And what we found was really that, in general, the result had been reasonably positive, more for the equity market than the bond market. But what it really showed was that all things held equal, the election itself was a non-event in the bond market. It was really more what the inflationary impact of whatever election spending had been happening during that course, over that period. What that inflationary impact had been, because of course on the equity side, some inflation is good inflation, right? Because it means the companies are doing well, right? On our side, more often than not, all inflation, because we're not naman Japan coming from a deflationary environment, is not so great for bonds, right? So it's typically been a non-event, except in the case where, over the course of an election, inflation has really spiked significantly higher, and then the bond market has reacted, of course, negatively. But again, it hasn't really been our finding that's happened immediately after an election. So I would say that for the equity market, the election is positive because of the spending, and for the bond market, it's not really very significant.
All right. Thank you very much for that, Miguel. And of course, in the interest of time, we will just take this last question, and this is addressed to both of you. Given that we have discussed the corporate bond fund in the Alpha Opportunity Fund, the question is, which mutual fund should we invest?
Okay, I can start, and then Carlos will wrap us up. It depends. That's the answer. Both. It really does depend on a lot of things, right? And I'm gonna kind of like, I'll go back to basics here. I hope people don't mind. Like every time you invest in anything, you need to answer 3 basic questions. What is my investment objective? What is my investment risk tolerance? And what's my investment time horizon? Because if you're saving for a trip to Boracay in June, it doesn't matter what your view on the equities. It could be up, it could be down. That's 5 months from now, man. And you're gonna need that money to pay for your hotel, diba? So match your investment based on your answer, the answer you have to those 3 questions. If you know you're gonna need the money in 5 months, put it in the money market fund, because that will have a very reasonable chance of being positive. You don't have to worry about the market. If this is money you can afford to leave for a couple of years or a year, maybe the bond fund. Maybe if it's money you can afford to leave for a couple of years, in the equity fund, because that's where you have the highest risk return upside, right? But again, you have to answer all those 3 questions before you can kind of invest. But my answer to that is put it in both, depending on what your risk appetite and time horizon is.
Carlos?
Yeah, Miguel is correct. It really depends on your risk appetite. You know, for the more aggressive investors, you can go with the equity fund. If you are less aggressive, then you can go with a fixed income fund. You know, but even better, you can diversify your portfolio and invest in both funds. As you have seen in the performance, you know, we have showed a good track record in both of our funds. So if you want to diversify your portfolio, please invest in the fixed income fund and the equity fund. You know, but at the end of the day, like I just want to echo what Miguel said a while ago. It really depends. There's no straight out answer for that, because for every investor, they have different situations. They have different liquidity requirements, investment horizons. It's really different. So what investors really should do is try to look what their objectives are and what their situation is currently. And then that's where they can decide whether it's more appropriate for them to invest in an aggressive fund, like an equity fund, or a more conservative fund like the corporate bond fund. It really depends. So it's really up to the investor depending on their risk tolerance.
All right. Thank you very much, Miguel and Carlos, for that answer. Of course, both of your answers. And just to echo in, they mentioned that this is to all our audience. They mentioned that it really depends. Of course, each and every one of us have different horizon, if you will. If when will you be needing the fund? We have different objectives. What's the reason for investment or for investing? And we have also different risk tolerance, if we're comfortable with an aggressive fund such as an equity fund or a moderately conservative fund such as a fixed income fund. Of course, with that, we'd like to thank, of course, you all for our audience for being very engaging in our Q&A session. But before we wrap up, any last words, Carlos and Miguel?
No, I thank you everybody for coming and listening to us today. I hope that you were satisfied with the performance of funds and hope that you invest more. We're quite optimistic about this year.
Yeah, thanks everyone. Thanks for tuning in, and I hope you really learned a lot with our presentation. So I'll see you in our next webinar. Thank you very much.
Thank you very much, Miguel and Carlos. And of course, we thank our audience. All our audience, we appreciate you taking the time to join us today. I do hope that all of us were able to gain insights and key takeaways from today's webinar. Of course, we learned. Personally, I learned a lot from these industry experts, fund managers of the best performing mutual funds of 2021. So I do hope, of course, our audience were able to get more insights and key takeaways as well. So now, did you know, for as low as 1,000 pesos, you can already jumpstart your investment journey? Here's how you can invest in Atram funds.
Hello. To open an account with Atram, just visit our website at www.atram.com.ph. Here, you can learn more about all the funds and services that we offer. Our site will then guide you to our online investment platform, Seedbox, where you can start investing for just 1,000 pesos. But if you have more questions, visit the website's Frequently Asked Questions page or Atram Academy page. Thank you.
On our next webinar, we'll be tackling the Atram's top performing UITFs for 2021. In case you have not registered yet, you may do so by scanning the QR code, or you may also type in the link flashed on your screen. Maybe we can give our audience around a few seconds to pull out their phones and scan the QR code for them to register on our next webinar. Again, if you have any friends who you think would like this webinar but are unable to attend, feel free to share the YouTube replay of this session and visit our YouTube channel. That's at Atram Studio. Again, you may do so by scanning the QR code found on your screens to visit not only our Atram Studio but all our official social media pages. We'd like to invite you all to join Atram's official Viber community group. That's #AtramPH community to stay updated on the latest announcements, advisories, and reminders. Scan the QR code or visit the link on your screen and get a chance to win Atram merchandise. Lastly, please answer the survey at the end of this webinar. We'd love to know your thoughts on today's topic. On behalf of everyone here at Atram, thank you very much for your attendance and participation. We wish you and your loved ones continued health and safety. Have a great day, everyone.